streaming live on yorbamedia.com. My next guest is Nick Santiago. He's been on our show a couple of times. Let's thank him for showing up again today. Thanks, Nick.
Oh, thank you for having me, Michael.
Oh, my pleasure. All right, the world as you see it, Nick, the S&P 500. Let's start there.
Well, so far from what we see, we've held this low that was put in, basically the high volume low, which was basically the 9th of August, and we've traded above that level. So that low was put in with massive volume right around the 1100 level on the S&P 500. It was also a 382 retrace from the March 2009 lows and a 7.75 retrace from the July 2010 lows. So that has a lot of energy to hold up for a while. Tomorrow and really through this week is going to be a big test, but it's options expiration, so you never know what can happen. There's a lot of institutional game playing that takes place. But right now, as long as it holds and starts to base a little bit, we probably will get a move up into the Labor Day holiday, and then after that, that's when I think the bear will come back out again.
Okay. Now, when you say a move up, do you have any prices in mind that you're thinking about?
Yeah, I think there's a legitimate shot. If you look now, we've actually bounced up from 1100 to around the 1204 level. That happened to be just above a .382 retrace area. So we have a shot at 1225 and a real stretch here, but maybe 1254 you can't rule out. I think that's a possibility. Again, this week is going to be turbulent, so you never know what can happen. We may see more of a pullback first, but I think there's a legitimate shot at the 1250 area.
Okay, all right. Let's see how that pans out. I remember from the last time that you were on, you were talking about the transports holding their level. What was it, about 4,300, and it did. So far so good.
Yeah, so far that was another, right around that same time frame, that was the low there. Transports held that area, and they were completely, let's face it, the entire market was oversold at that point. So you knew that bounces were going to come in, and they were going to be pretty furious to the upside, almost violent. And, now we're holding around the 45.77 level today, and we'll see where it goes. Again, a similar sideways pattern could be getting put in on the transport. So we'll see where it goes from here. But I think there's a legitimate move on the transports up to around the 4,800 level before it starts to hit some, pretty solid resistance.
Okay. All right, let's talk about the U.S. dollar, because we had a nice pullback, and I'm looking at the futures here. We had a low today, at 73.51, but it's right there in an area that had a low back in May also. So what are your thoughts on what we could do from here?
Well, the dollar could actually have a little bit more downside in the short term, but as you know, Michael, and I've been talking about this, I believe that the dollar is very close to putting in a low. Today, it looks like we have a very good amount. If you're looking at the spot price on the U.S. dollar index, maybe we have a touch more downside, but I don't think there's much more.
So you think the April and the May lows that we've had this year may hold?
I do think so.
Okay.
If you look at the dollar, it's been so beaten up, and the pattern that's in there. I don't think the Federal Reserve is going to do a QE3. I know Ben Bernanke is going to do the Jackson Hole conference, and where he announced it last year. I just don't see them doing that. They have to strengthen up the dollar because gold is running wild, and gold and silver are really the worst nightmare to the Fed.
Well, I've been talking to a few of my friends, and they were saying that one of the reasons that they're bullish the dollar and they're bullish the U.S. stock market isn't necessarily because they feel that our economy is going to turn on a dime and get better and our dollar is going to get stronger. It's because everything else is so much worse that it's seeking a safer haven.
I think that's a good point, but if we've looked at the markets, we've seen when the dollar goes up, the market deflates and goes lower. That's why I'm very bearish industrial metals this year, second half of the year. I think copper is going to get sold off, is going to sell off even further, iron ore, steel, anything in this industrial metal area is going to get sold off pretty sharply, and that will probably come, in my estimation, on the back of a stronger U.S. dollar index.
Well, copper's already had a pretty good move, from 454 just in the beginning of August. And now we've got something that could be some people would consider it a pennant, some people a bearish pennant, some people would consider it an ascending triangle. So when you say sell off more, do you have any kind of a target in mind?
Well, yeah. Let me just punch that chart up. Right now, I think we're probably in for a short-term bounce. But after this, I think copper could make new lows for the year. So, to see it go down to 350 or something along those lines, I would not be at all surprised by October, November of this year.
Okay, if the dollar rallies, I could see that with you. They'll bounce off the April highs from 2010. But it made a huge low down there in December 2008 when everything came undone. Do you see that kind of bearish scenario, or just a range?
Well, it's always possible, but I am not in that camp that we're going, to go down to that area.
Okay.
Copper's had a great move, but to see it go back to the 2010 lows, I mean, that's a possibility. Short term, I'd say 350, then ultimately $3 would be about right.
Okay, all right. What other? Let's get into, for those people who don't really know what the antics are that the institutions play on these option expiration weeks. Give us some examples of how that plays out in real life, and how it can really get in your way of trading and making a decision.
Yeah, well, that's great. I'm glad you brought that up. Today in our intraday stock chat, the volatility, if you just look at any chart over the past 4 days, you'll see that it's just been absolutely insane. It looks like a cardiogram if you use a 10 or 15-minute chart and you look at Monday's action through today. The swings have been just tremendous, and there's really no real trend in the market this whole entire week. It looks like we're just moving up. They buy 5,000 contracts. They buy 10,000, 50,000 contracts. They're not in there buying one or two contracts. So they have these computers. They read all of those small contracts being purchased, and they know where to move the stock so that those contracts will expire worthless or out of the money.
That's great information, and I know I've lived through that going, what's really going on? But before we bring that up, again, you've got a webinar coming up this Sunday. What's going to be in the webinar?
Yeah, this Saturday we have a webinar at 1 o'clock. It's going to be virtual over the Internet, where participants can ask as many questions. I'm going to teach everything on my proprietary time counts and my cycle information. I'm also going to cover market symmetry, multiple patterns, how to calculate those patterns, how to figure out exactly where the market is going to move and what to be looking for, how to use the correct way of using Fibonacci, also moving averages. It's about a 6-7 hour event, and it's a boot camp. We take 2 5-minute breaks throughout the entire day and really get through the nuts and bolts of the entire market. Most traders that have taken this, and I've had traders, institutional money managers that have been trading for 30 years, tell me they've never taken anything like this. So if anybody wants to come out on Saturday afternoon, there's still space available.
You're going to need Monday off for that one.
I usually do. I have a sore throat usually after that webinar.
Now, inthemoneystocks.com, is that where they go to register for this?
Yeah, that's where they go, and they could click on the webinar page and or education page, and you'll see the webinar is scheduled for this Saturday at 1 o'clock.
Okay, and quickly, for those people in the car, toll-free number? Or a number?
I don't have that number offhand, but you could just look right on the website. It's there.
Okay, or you can click on the contact button on our homepage, and we'll make sure they get that information over to Nick.
Thank you very much.
My pleasure, Nick. We'll have you back soon, and we'll be watching those trades.
Thanks again, Michael. Take care now.
You too. All right, up next, Dale Pinkert, Trader